It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, your knowledge-based property podcast. And we're doing it 7 days a week from all cities of the Australian housing market, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Yes, there's a lot of content there. And because we're coming into the Christmas New Year break, you're going to be able to do all of that catch-up, even though you can take us anywhere on the road. The good thing about that is you'll be able to listen to us while you're on the break. And with over 1,000 episodes, there is a lot to dive into. Well, it's a Monday morning. The weekend is come and gone, but Christmas Day is getting ever so closer. December the 16th today. And we're going to catch up with somebody we haven't heard from for a while because he's been busy. And that is Rich Harvey from Propertybuyer in Sydney, who in any one calendar year has an extremely busy 12 months of trading. And good morning to you, Rich. That's about it, isn't it? So busy.
Yeah, that's it, mate. It's certainly been a busy year, been an interesting year, but no, great to be back on the podcast with you again, Craig. Always enjoy our chats.
Now, 2024, let's get you a little bit of a take on this because a lot really happened right across the year. I think you had a couple of moments, personal achievements that you wanted to talk about.
Yeah, well, I think proudest moments would be we won another 2 awards. We won the back-to-back the Real Estate Institute Award for Excellence for Buyers Agency, and also first off the rank for PIPA, the Property Investment Professionals Association. They gave us an award for winner of Large Business of the Year. So super proud of that. But I guess in addition, like as you say, I've been busy because I've been growing my team of buyers agents across Australia. But I guess that's probably the simplest way to answer your question is the proudest moment for me and I guess all of my team is when we take a client through that whole process of buying either a home or investment property and do all the research and negotiations and then call them and say, Mr. and Mrs. Client, we've got you a property. And just hearing that sound in their voice is honestly the best thing that we can ever achieve.
Yeah, no doubt about it. It's not an easy process. It doesn't matter whether you're dealing in $1 million properties or $10 to $15 million properties. The reaction is the same. Now, let's just talk about some of the biggest challenges for 2024. What do you think when you look back across 2024? What were some of those?
Oh, look, Craig, it hasn't been a terrible year, but it hasn't been an easy year. I think the biggest challenge has been this word cost of living. You know, the word COVID was used all the time when we used to do the podcast in the past, and COVID was an overused word. Well, cost of living is overused today, but it weighs really heavily on people's minds and it weighs on the household budget. You've got so many families facing financial pressure. So this whole decision-making process around buying property has been put on the back burner or delayed. And also the decision to use a buyer's agent is taking a lot longer than usual. I think people are typically waiting for the market to decline, but that didn't happen this year. Prices kept rising. The other big challenge for us as a buyer's agency is there's a lot more competitors in our market. So that's been challenging for us as an industry to deal with that. I think the procrastination has been a big issue this year, and just that overarching cost of living, interest rates being higher has been a major challenge.
Is it fair to say that the more expensive the market gets, the harder it is for people to find budget to use a buyer's agent?
Not necessarily at all. No. I mean, we've got clients, we save our clients often a lot more than we charge in fees. And it's also knowing the nuances of negotiating. So whether you're a first home buyer or a $50 million buyer or just an executive trying to upgrade your home or a divorcee trying to find a single unit, we can help people at all situations and all budgets. And we have a particular type of service to suit all of those people. So it's a myth to think that it's going to cost you more money to use a buyer's agent, because you often will typically end up with a much better quality property at a very fair price, if not a better price than what they've negotiated on their own, than what we can do.
Yeah, and just another little segue question is, we've sort of talked about this quite a bit in 2024, are the mum and dad, the bank of mum and dad, working with buyers agents. We've had Veronica Morgan talking about this. I'd be interested in your takeaway. She told us earlier in the year about stories where mum and dad become so involved in their children's property that sometimes the buyer's agent has to walk away because it's just too difficult and the children don't have much of a say with the property that they're actually buying.
That's too funny. Well, we haven't had that factor with our clients. If you've got too many decision makers in the kitchen, you end up with a messy kitchen, right? So you've got to have clear lines of communication with your clients. But to your point about the bank of mum and dad, I can share a personal story, in fact. And I helped my son to buy his first property just a couple of weeks ago, in fact. We offered to put up an equity guarantee. We said, if you can save $100,000 of your own money, then we'll match that as an equity guarantee. And that's what my son did. And we were very successful a couple of weeks ago, securing a nice little apartment down by the beach, and him and his wife will be moving in there in the new year. So, there's a lot more of the bank of mum and dad actively taking part, but you've just got to be clear on the parameters on what you can afford to buy and what's going to suit them to get onto the property ladder. Because I think sometimes the mum and dad might want them to have a really fantastic property, and the kids might go, look, we're just happy with this. Or it could be the other way around. The kids have a very, expensive champagne type budget, but the parents aren't wanting to chip in that much. So it's all about getting clear lines of communication and expectation on the table.
Yeah, that's a good one, because the son absolutely rose to the challenge from the father. All right, we are talking to Rich Harvey this morning on our Monday. We'll come back and we'll have a look at some trends for 2024, some of the events, and we'll also look ahead to 2025, which is marching into town.
The Real Estate Podcast wishes you and your family a fantastic Christmas break and a happy new year ahead.
And right now it's time for another 30-second property tip. We go to Hobart and we are catching up with Eddie Hugenhout. And good morning, Eddie. What have you got for us this morning?
One of my key tips that I give to my purchasers is if they really want to make an offer and they want to win the offer, it's often helpful if you make your offer an odd amount. Don't just make it $850. Because someone else might offer $850 and then it's a bit of a battle. But I'd then go into something like $852,400 or something like that, just to get the pointed difference, and you'll be surprised how often that will get your offer over the line.
It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market.
And it is a Real Estate Monday. Rich Harvey from Propertybuyer is here with me this morning. And Rich, let's talk about your perspective about some of these trends and events, some of those big impact events on the property market as you look back across 2024.
Well, I think the biggest one is we've had higher interest rates for longer, and that's put a drag on affordability, number one, Craig. So everyone was expecting rates to drop a bit faster, but just remember our Reserve Bank didn't raise them as far as other countries, so they don't have as far to fall. So sticky inflation has been hanging around. I'm one of the 40 economists that do those predictions every month on where they're going to end up, but that's been a big trend of interest rates being higher. Second one is that everyone thought that because interest rates are higher, the market's going to slow or it's going to crash. But that didn't happen. Obviously, we've had, in fact, significant price rises. Perth, in over 20%. We've had Brisbane, around 15%. Adelaide, 12, 13%. Those prices have been going up despite 13 interest rate rises over the last 18 months. So that's been a pretty constant trend, but I think we're in for some stable waters. I think the other trend in 2024 is continuing to work from home and a little bit more of return to the office factor. So there's been more of that rebalancing factor of people getting that sort of hybrid working going. And of course, there's been the constant news cycle that makes people do nothing and worry about everything it's out of their control. And I always say that procrastination is the thief of time. And there's been lots of discussion around the housing market in politics, affordability, shortage of supply, lots of policy ideas thrown around to fix the housing market. And it's like everyone wants sort of a silver bullet or some sort of panacea to fix the housing crisis. But I can tell you, Craig, it's not going to be fixed anytime soon. We are in for a protracted period of difficult supply issues. Cost of building's gone up. We've got, 500,000 migrants that came through the doors again. I think next year will be around 400,000. So it has been a challenging year because of those kind of trends.
And that's without even talking about the trade wars that are going to happen with Trump. And I don't know if you saw this just a couple of nights ago. We had Macron meeting with Trump. Zelensky was there. I sort of feel so sorry for Macron going, well, I've kind of got to kiss the ring here because this is going to be a massive challenge in 2025. So perhaps on that, you could sort of extrapolate that out a little bit more with some of those major drivers for next year.
Yeah, look, I've got 5 to share with you, Craig. I think firstly, just again, talking about interest rates because it's top of mind. I think we're going to see around 3 rate cuts in 2025. I think the first one will happen not in February, but 1st of April when they meet. It won't be an April Fool's joke. It'll actually be happening, I reckon, then, depending on the unemployment number. But the delay in rate cuts could be a bit of an issue. So I think they are going to come. We'll definitely have 2, but I reckon we'll see 3 next year. And that will just spur demand. That will reignite the market. You won't see the market taking off crazily. It's just going to reignite demand. Secondly, migration levels are going to stay high. I think they'll come down from 500,000 down to about 400,000, even though the government wants 260,000. So you've got very high migration. And when you've got that coupled with construction cost shortfalls and a rental crisis, you're going to see a very high desirability to buy established, already built homes. So the demand for established homes and apartments will definitely rise. We're going to see, thirdly, as you've just indicated, geopolitical and a lot of external economic factors. I think the Trump tariff trade war won't be as bad as it's quite made, especially for Australia. We have a very good relationship, and I think Trump is doing the exaggerated negotiation tactic to say, hey, we're going to put 60% tariffs, but it might end up being 15 or 20 on China. But that will possibly have an impact on maybe the resource-heavy states like WA and Queensland. Fourthly, I think you're going to see good regional opportunities like those secondary markets, Newcastle, Central Coast, Byron Bay, Geelong, Sunny Coast. They're going to be really attractive alternatives to the capital cities that have reached well over $1 million price point. So those lifestyle buyers will go there. And I think the other thing to watch or as a recommendation for investors there is with rental yields tightening, a lot of investors are going to be chasing higher yield properties or higher rental properties. So things like dual living homes, rooming houses, granny flats, mini homes, they're all strategies that I think will be good things for investors to reach out and embrace next year.
Yeah, there's a lot to think about for 2025. Just lastly and quickly, perhaps just give us a few sound bites for most of the capital cities and what you're expecting in the way of growth or a downturn.
Sure, I'd love to. So just briefly, Sydney is going to take a bit of a breather next year. I think it's been a very resilient market. I don't think we're going to see drops at all, but I think you're going to be looking at price rises of, say, 1% to 5%. The affluent suburbs, it's always been a really attractive financial city. Melbourne, I think, is the best counter-cyclical buy to make. It's still going to have significant headwinds. I think growth will be low to flat, but if you can get in there and buy with a population that's now higher than Sydney and at a price point that's 60% below Sydney at $1 million compared to Sydney at 1.65, it's definitely an opportunity there. Brisbane's going to be a standout performer next year, and I reckon for the next 5 years. Heavy interstate migration, massive infrastructure in the lead up to the 2032 Olympics. I'm expecting double-digit growth again there next year, and the Sunshine Coast and the Gold Coast along with it as well. Adelaide, nice little consistent, reliable performer, still affordable, robust local economy, defence, technology, good housing demand, and really low vacancy. And also throw in Hobart. I think after years of exceptional growth, Hobart's stabilised, and I think it's got, again, a resilient economy, and it's certainly got some unique lifestyle appeal and pretty good green credentials, Craig.
All right, so there's a little bit of a look at looking back over 2024 and looking forward to 2025. Rich Harvey, you go well. Enjoy your wind down. Enjoy the Christmas New Year, and back into it for 2025. We'll catch up with you at some stage into the new year.
Craig, thank you so much. Wishing you a great holiday season, and thanks again.
We connect you to the best real estate information across Australia. The Real Estate Podcast.